Alrighty, hello everybody, Jamie Saettele here. It is April 2nd, 2021, and welcome to Power Hour with me, Jamie Saettele. Relatively quiet week here in FX. Holy Week, Good Friday today, so really today the markets are essentially closed. As you know, FX never really closes, but in case you think I was making that up, just go to your TradingView and you can see up here this little holiday thing. I actually just noticed it says right here, holiday. So you're probably going to want to see a chart in order for me to see what I'm talking about. All right, here we go. Yeah, so I noticed this today. You've got, it says holiday. I think that's a new little feature. So when there's a holiday, it'll say it right here. Anyway, like I said, a quiet week for the most part. So where we left off last week was, looking at the dollar, noted that we were coming into significant levels, right? In US dollar index. The US dollar index is the Dow Jones FXCM dollar index, which is a quarter each of euro, pound, Aussie, and yen. And this index nailed that 200-day average. So we traded there yesterday and on Wednesday, and we've pulled back slightly. So as I wrote in my updates this past week, I'm still constructive, the dollar generally, looking towards 12,010, 12,030, okay? That is going to be the lower end of that range is where you have two equal legs up from the low, okay? The upper end of that range, 12,030, is going to be this parallel. So as you know, I do a lot of pitchfork analysis, trend line analysis, and so forth. And you can see here we have a long-term pitchfork structure. Okay, it goes back to 2017. And I'm going to talk about an important concept in median line analysis, which is symmetry. So you can see you have parallels on either side, okay, of this pitchfork, or of this median line, sorry, the bold black line. You've got these two magenta lines. You can see that we respected this magenta line, and this is not some Monday morning quarterbacking stuff. We were talking about this in real time for months and months and months. We were looking for support on this parallel down here because it was equidistant from where the parallel was above the center line. So, take the distance here, add it to the bottom, and that, estimates where you're looking for the next bounce. And sure enough, we got it. Once we came up to the center line, we pulled back. Now that we're above it, if we were to pull back a bit more over, it could be even several weeks, depends on how volatile the markets get, we would be looking for support back at that center line. So there really are several key levels to think about. Essentially, 11,795 is going to be proposed support. 11,850 if the pullback is, very shallow. And then again, the resistance levels we're looking at are up here, 12,010 to 30. Okay, now that does not mean that the dollar can't go through this level at some point. It simply means that's the next important, what I call decision point or decision area, right? And that's a good way to think about markets, I think, and trading in general, is try to map out where the decision points in the market are, right? Instead of trying to make a decision all the time, try to focus your attention on where and when the decision should be made, right? And then you decide if you're going to basically go with it or fade it, right? So it's almost like a train or something, each stop, right? Each station, and try to make your decision whether you're going to, get on the train, off the train, and so on and so forth. So there we are with US dollar. All right, let's check out DXY. I frankly haven't actually looked at DXY in a while. The big resistance here is also slightly higher. We're looking at 94.30 for this level, or for this index, I should say. And this is probably a better one to look at, actually. Here we go. Yeah, so this is a weekly chart of DXY. 94, call it 94.50 to 95.50 even could be a level to keep in mind for DXY, which is a pretty good move from here. You could certainly have a bigger pullback before then. When you're looking at DXY, you're thinking essentially the opposite of euro, right? This index is at 57% euro. So, you know, this is going to be much more Euro-centric. I refer to it as the European dollar index. So let's go to euro dollar. All right. So this is where we're getting to a point right now where we can kind of pinpoint some important support resistance levels for the dollar. So the 5 waves up, right, from the March 2020 low, a little over a year ago at this point. And right now we're kind of in the middle of nowhere. I'd like to see a test of 1835 or so. That's where I'd actually look to put on a short. But also, I'm thinking that we only have kind of one more stab left on the downside. Now, it doesn't mean that it has to happen, right? It doesn't mean that we have to stop there if we start to come off again. Just saying that's a huge level. That's the trend line from down here. So the way I am today is if we get a pop into 1830, 1835, I'm looking to fade that. I'm looking to short that level. And if we drop into 1650 or so, I'm looking to buy that level. So, you know, whereas for the last several months, I've been, you know, staunchly euro bearish, dollar bullish, as I sit here today, I'm willing to trade both sides, right? We've come into a level important enough where it's worth considering fading this bigger move, you know, from the downside that occurred in January. So we'll look at some other charts here in a minute that, you know, suggest we have decent euro support. You have to excuse me, my allergies are terrible right now. Always comes with the start of baseball season here in the States, which I'm happy to say started yesterday. But back to FX. This is another technique, by the way, trading technique. So with median lines and trend lines, etc. So what you want to do, draw a channel, which is what I have here. I'm just kind of reproducing it so you see. So draw this channel, right? You have a channel right here, okay? That's where this line is. Now, once you drop down below the channel, the underside of that channel becomes your estimated or proposed resistance level, okay? That's why we're looking for resistance at 1835, okay? Also, it does intersect with a former low. That's the March 8th low, 1835, all right? I'm going to bring in a different charting package here to show you as well. 1835 is roughly, you can see this line right here. This is a volume weighted average price from the Fed. So I've got, this is from FOMC, which is on 317. I've got VWAPs anchored to that FOMC hour for every currency that I follow, or every major currency that I follow. And for euro, it's right up there near 1835, which is where the spot price would be at 1835. All right. So that gives us confidence to sell into that level. Let's actually go back to the futures. Now, on the other hand, and from a more important, bigger picture perspective, guess what? We've hit VWAP. This is now a daily chart. We've hit VWAP from, excuse me, we've hit VWAP from the March 2020 low. That is huge. That does not mean that we can't dip below it slightly, right? Again, I am looking for a test of 1650. However, I down here have to be, you know, or want to be constructive if we get the right price action, right? We're getting into the right zone where we want to be constructive. And, you know, if I'm thinking out a bit further, maybe we're looking to target eventually 2021 VWAP, which is also basically VWAP from the high up here somewhere. But we're getting a bit ahead of ourselves if we start to talk about that. All right, so bottom line when it comes to euro is two levels, 116.50 and 118.35. That's really all I care about right now. All right, now this is a good time for me to talk about is working with Scandinavian Capital Markets as their chief technical analyst. As you know, this is a broker company based in Stockholm, Sweden. But if you did not know, I mentioned this last week, we are looking for profitable money managers to join our ranks. We have clients all over the globe. They're looking for more strategies to invest in. So if you're a profitable trader and you would like to get into managing money, we can fund your strategies with up to $2 million, okay? So come and show us what you've got, show us your skills. To register, go to scandinavianmarkets.com/fundmytrades. Again, that is scandinavianmarkets.com/fundmytrades. All right, let's move on. I want to take a quick break from the honing in on FX because this, I wrote about this yesterday. We're going to look at the copper gold ratio, and this obviously plays into FX. We're going to look at copper, gold, and this is a weekly chart of copper divided by gold, okay? You see this trend line that we've hit? We hit this basically back on February, late February, and we were starting to roll over a bit, right? So this is the copper divided by gold ratio. You know, just think, it doesn't matter what it is, it could be anything. But if you saw this chart, and have we broken out yet? No, we've kind of, you know, come up here and failed, and we're pulling back. It would seem a good spot for us to pull back some, right? That's my working assumption right now, is that we're going to pull back a bit, and, you know, eventually we might be looking for support, you know, where you'd expect to see some, you know, support on a chart, which would be an important pivot, something like this. I'll just look at the chart. You can see here you've got, you know, look at these levels here, right? This is where the ratio might be for support. But as of right now, we are looking for a pullback in this level because we're at resistance, right? What does this mean? Well, as you know, copper to gold is indicative of inflationary trends. So it basically looks like interest rates. And when I look at rates, I look at the long end of the curve because that is the one that is most sensitive to inflationary pressures. So in orange here, I've got the 30-year yield, and in black we have our copper gold ratio. Pretty much the same thing, right? So again, when this is going down, it's going to be meaning that you're in a deflationary environment from a market standpoint. When it's going up, in an inflationary environment, right? If you pay attention to financial news or markets or whatever at all over the last year, you've known that, you know, they've been talking about this inflation trade, right? That's what this is, up, okay? Inflation trade. What does that mean? Well, it means higher commodities. It means a lower dollar. Not every commodity, of course, but things like oil, copper, of course. Gold has not gone higher, but, you know, also higher yen crosses. Well, we're starting to see that reverse a bit, right? And again, since we're at resistance, I would not be surprised if we did continue to see that. Obviously, the dollar has been rallying since January, right? So that has been occurring. Commodity currencies are just kind of starting to roll over a bit. We might have a little more left there. Yen crosses have yet to do anything. So that is where I kind of want to focus my attention a bit. And I will show you some we looked at Aussie yen last week, but we're going to look at pound yen here in a bit, which is coming into a massive, massive level. So, from a macro standpoint, it's important to understand the dynamics at play here, and what this means, right? The inflationary, deflationary cycles that, are oscillating, in markets. And it's not just, pertaining to FX, but obviously sectors, emerging markets, tend to do well in inflationary periods, et cetera, et cetera. So I did want to bring that to your attention as well. So the two legs of that, right? Copper divided by gold. So this is the copper chart. Again, huge resistance that we came into. This is a shorter term chart. You can see that we are kind of sitting on a massive shelf. So keep an eye on copper, because if this breaks to the downside, which eventually I do think will happen, simply because we have come from this massive long-term, resistance line, former support line, right? If that breaks, then you're going to get a waterfall, and you might get a massive drop in things like Aussie yen, etc. So probably, the renminbi. Here's gold. Gold, on the other hand, looks pretty promising down here. So channel, we nailed that channel support perfectly, right? Kind of came into an important price, horizontal price shelf here. Broke above the 2021 trend line here in blue. Let's go to a near-term chart. Next week, I'd be looking to be a buyer of gold on a pullback down towards, say, 1712. We could pull back, basically from like 1730 or so, which we're at now. That is, you can see this parallel here. You see that was former support, resistance. Watch for resistance again. A little pullback, 1712. Look to buy it. Take it up to 1780, 1785 or so. So we've got a good trade idea there. So those are your two legs of that cross, right? And it is interesting to note that, gold does look near-term bullish, and copper, if it breaks, has some downside potential. Okay. So there is a little macro lesson on copper gold. All right, let's get into British pounds. We talked about last week the fact that we had 2007-2014 trend line. Had that huge weekly candle reversal back there in late February. Looking for downside given the failure to break through this resistance level. Okay. 39.20 looks like great resistance, probably the top of his zone. If I look at, I actually really like shorting cable next week up into this region. Again, 38.80 to 39.20, probably the top of the zone, given the fact that that is the underside of this trend line back from March 2020. The bottom of the zone, 38.80, is going to be two legs up. Okay. I actually want to put this, hold on. Sometimes you'll hear me talk about or write or tweet about what I call daily reversal resistance or weekly reversal resistance. A lot of people get confused on what that means. That is simply, so in the case of cable, right, we're looking for the high week here. We are looking for the close of that week. That's what we call daily or weekly reversal resistance in this case. So it's the close of the high week, which is 139.23. On my charts, I put those in bold lines. So in this case, you can see that is right there. Okay. Is a great level to want to sell into. All right, so that is cable. Let's look at Aussie. clean pattern here in Aussie. Got this head and shoulders top that basically started in January on a near-term basis. Let's go to a 60-minute chart. What I think we have is a flat right here from the March 25th low. So that's an A, that's a B, and we are unfolding in wave C, looking for basically just a move up through 76.64 before we'd want to be short Aussie again, okay? Why do I say that this is a flat? Well, what tips you off to a flat, you're always looking for clues, right? Like an investigator or something, detective. So the 3-wave drop into a low always should suggest that you are trading in an expanded flat correction, right? Because patterns don't end on 3-wave moves unless they're diagonals, and this is not a diagonal. This would be most likely a flat. So there we have our proposed flat. I actually want to see if this was 127.2. Where is that? Here we go. And it was. Look, also in flats, you often have wave B equals wave A, 127.2% of wave A. It's exactly what it equals. So this is beautiful textbook stuff that Aussie is offering us. If you wanted to trade really short term, you could look to buy next week around 75.70 or so. Okay. Target 76.70 and then look to short. I still think the bigger swing is on the downside towards initial levels, probably about 74.20. Okay. You're going to have the 200-day average at that level as well. But that is the high from September 1st of last year. It's also the bottom of this channel. So me, in my time frame of trading, I'm looking to short, again, up here around 76.70. So very clean stuff here from Aussie. Really, right now, patterns are extremely clear. Levels are extremely clear. Sometimes that happens, right? You can go months and months and months without having a clue as to what's going on. With the way I look at things, right now just happens to be a very clean, clear, lucid moment. Okay, let's look at Kiwi. Now, interestingly, Kiwi appears to have completed its flat. You can see here, if I look at this, right, you got the A, you have a 3-wave drop. Did not actually take out the lows. We got that non-confirmation deal yesterday where Aussie took out the lows and Kiwi did not. But A, 3 waves down into a B, C. You could say from a textbook perspective or whatever that this is complete. In the real world, I don't think it is because, again, Aussie does not appear complete. So it's unlikely that Kiwi is complete. So I would look for Aussie, or Kiwi, I should say in this case, I would look for Kiwi to resume a bit higher. And 71 looks to be a key spot for the New Zealand dollar, right? I mean, you can see it clear as day. 71, 71, 71, 71, 71, right? So let's look for 71. Also have that channel up there. Now, bigger picture, right? Bigger picture, I think that Kiwi could be awfully bullish, okay? At this blue line. This is basically the top side of a neckline. That's going to be crossing the December 2019 and September highs from last year. I'm looking for a retest of that, essentially one of these. Where's my little paintbrush? Where's paintbrush? Here it is. Looking for something like this, and then a bigger base to form down here, and then we can go off to the races, okay? In fact, we've seen this blue neckline do some work before. It's back here, right? Look, pull up, break out, pull back, rally, pull back, go. So something like that. All right, dollar CAD. Allergies are terrible right now. Okay. Dollar CAD. You want to be looking for support around 2470. I'll zoom in a second, but this is a shift fork, okay, from the March high from last year. You see the parallels between the center line, right, and the upper and lower parallel. That's the 25 line, the 75 line. 75 line, look at that perfect support here. And then as we zoom in, you can see, you know, some of the spikes on it. Support, 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 resistance, support. Let's go to an hourly chart. I'm thinking that we get a bit more weakness. You know, 2470 to 2490 should be support here. That is going to be the lower end of that is the 618 rally, 618 retrace, excuse me, of the rally from the low. 2 equal legs down is going to be 2494. Again, you've got that 75 line cutting through all of that there. And then you have that bold line here, which again, as I mentioned, I put those bold lines for, reserve those for daily and weekly reversal support. That, my friends, is right here. That is daily reversal resistance. So that's the reversal day and the low day, right? The close of that day, which is March 18th. So hone in on 2470.90 for support in dollar CAD. Okay. All right. Now we're going to go to my favorite setup is Turkish Lira. Now, whether you want to do hold anything over the weekend, obviously, is up to you. But first things first, let's look at how clean. Get rid of this for now. But how clean the pattern is from the high in November, right? You've got wave 1 down, which is like a perfect 5 itself, right? Wave 2 up, 3, 4, 5, A, B, C. You can't draw it up any better. We traded some of this really well. We were short for a lot of this. We were actually long for a lot of this. We were short for a lot of this. We were out, thank goodness, over the weekend. And that's another thing. You got to understand, weekend risk in FX is a thing. So yeah, be careful. So, but the setup here, and again, I'm not sure I'd necessarily leave an order over the weekend, but you want to be, I'm looking to short a rally up into here. I would, you know, the ranges here are big, but I would look at, say, 827 or so, which is the 618 retrace. So 827.38 is the 618. If you were stopping out over, say, you got to give it some room because, you know, Turkish Lira's got a big spread. But if you're going to stop out maybe over 846, 847, and then look to target down here, basically 739, 740, that is a big reward to risk. It's probably like 5 to 1, right? So that is a great trade idea here with Turkish Lira. Looking to sell the dollar against the Turkish Lira into 827 or so, right? When markets get volatile, they tend to, you know, clarify. It's when Elliott traders can really thrive, and not that I'm a pure Elliott trader because I do use a lot of other tools, but in this case, you can see just how clean the waves are as volatility has picked up in Turkish Lira. I mean, even this drop here from this week's high, right, you can see a clean 5-wave impulse down, 1, 2, 3, 4, 5, right? So we're looking to sell that against this high. Now you can see this red line that cuts in here, okay? I want to show you where that comes from. All right, so here's a long-term chart of Turkish Lira. I actually talked about this yesterday in my note, my market note. This is another technique, channeling technique, trendline technique, what have you. This is called parallel channels with original slope. So in this case, we're looking at a very long-term example. You can see, draw this off the 2008, 2010 lows. Now, we do that because that is again, the original slope, right? That's the first two lows, first two pivot lows in this massive trend. Now, what you do over time, okay, you'll be able to extend these parallels. So this is log scale, so you have to get the degrees right. So this is 16 degrees. So let's see what we've done here. I'm a stickler for having my magnet perfect trend line on there. So 16 degrees, and let's see what that would look like. Okay. So 16 degrees. Okay. So for example, it's a perfect example, right? 16-degree trend line here. Extend it from here. That becomes resistance. You break above it, and it becomes support. It's like perfect support, right? Like, look at that. Look at all those lows. Boom, 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 right? Well, then extend it from, and again, this is not Monday morning quarterbacking. This was in real time. We actually called the top up here to the day in dollar Turkish lira based on this simple technique of drawing a line on a chart, right? That was really all that went into it. We extend then the parallel from this high, which is, again, is parallel to this. And guess what? It nailed the high, okay? We're then looking at eventually probably down here would be the next major level, you know, for dollar Turkish lira, which obviously is a massive move. So yeah, that's, you know, the main reason why I favor on a longer term basis, kind of, you know, fading this extreme long-term weakness in Turkish lira or strength in dollar lira. All right. Okay, so there is a lesson on median lines with Turkish lira. Now check this out. We're gonna do the same exact thing as far as channeling, but on a much shorter term basis. We'll do it with dollar Swiss. So what do we do here? Original slope, first two pivot lows, right? In the move, which is January 6th and February 16th. We had the high up here, we extend the parallel from it, and voila, right? We've got an estimated level for resistance, and sure enough, we reversed yesterday. Dollar Swiss is interesting. I frankly don't really trade dollar Swiss too much, but you know, you could see where the 250-day averages are. They just crossed actually and got it down here. You know, if we were to make our way down here at some point and get back into this, you know, the longer term averages, 200-day and 50-day, you know, you could see it. And again, I think it's interesting because of where we are on the longer term volume weighted average price levels, which again, euro dropped into its support. DX or dollar index futures has just actually did not quite reach its volume weighted average price from the high last year. You can see that it is just a wee bit higher. Let's see where Swiss francs would be. Swiss franc actually broke through it a long time ago. So nothing there. While I'm on these volume weighted average price levels, Jody says, I really appreciate this video. Jody, I am glad that you appreciate this video, and I hope others do as well. If you don't know, we do this every Friday, right? Power Hour with me, Jamie Saettele of Scandinavian Capital Markets and SB Trade Desk. I do this every Friday at the same time, rain or shine. So this is a volume weighted average price. We talked about gold actually earlier. We did not look at silver, right? But this was interesting. So this is an ETF, SLV, right? You can see that SLV has reached, not quite again, but close enough, the volume weighted average price from the low from March of last year, right? It's kind of a common theme. You know, virtually every asset in the world bottomed in March of last year. And this pullback that we've gotten since January, we're getting into just this week, we're getting to the kind of the first true support. So like it happened in euro, right? VWAP from the low in March. It happened in silver. What about crude oil? USO, it's actually not even close. But yeah, it's interesting to note that silver did reach that level. So again, kind of speaks to, metals generally, coming into support, right? And I'm talking about the precious metals, gold and silver, not necessarily copper, which is traded very differently, right? All right. So where was I? I am babbling. Let's go to, oh, I just got a Stellar, ST3LL4, I'm not sure what that is, Stellar, sent 100 coins. Thank you. Thank you. I'm guessing that's true through TradingView. Thank you so much. I really appreciate that. All right, let's look at, I said we were gonna look at some yen crosses, so let's do that. So remember, okay, so dollar yen, before we do that, let's look at dollar yen. So we talked about, I have mentioned, excuse me, the, look at this one. Okay, here we go. I did mention the daily and weekly reversal resistance levels, right? Or daily support, reversal support, weekly reversal support, etc. So let's look this. Let's look at dollar yen. This is a good instrument to look at for a real life example. So daily reversal resistance in this case is actually the close from right here, which is March 24th of 2020. Okay, the close of that day is 111.22. All right, that's a spot if we got there. I was hoping we were going to get there when we were ripping higher 2 days ago. But again, it's, with Holy Week and Good Friday today, it was, really a worldwide, holiday. Everything has just died down this week. So I don't know, maybe we get there next week when things kind of open back up. But 111.22, keep that level in mind. Again, you've got 5 waves up. You've got a measurement here too, where waves 3 through 5 equal 161.8% of wave 1. That's a common relationship. So we've already reached that. The line that extends off the highs from January and March is going to be a wee bit higher, around 111.50. But again, gold has come into big support. We've seen a nice 2-day rally. I like buying gold into 1712. Maybe we get that higher low in gold as we get a final high in dollar yen, right? Dollar yen or yen and gold, I should say, tend to move together most of the time. Now, there's not all the times, and there's never an always, but a lot of the time they do. And we looked at that copper gold ratio, talking about inflationary and deflationary pressures. You talked about one of the implications in FX for that would be getting a pullback or a drop in yen crosses, right? We've yet to see that happen at all. So, that is a spot where I'm kind of on reversal watch, not necessarily in dollar yen so much as something like pound yen, because remember, we looked at British pound, that's coming to a big, big level too. Check this out. I love this chart. And look, everyone's different. Everyone's got their own style, but I love looking at a level like this. And this has been a ripper, right? But we're coming to such a huge level. I would love to be able to short into this level. And TradingView just sent me 200 coins. Thank you, TradingView. Happy Friday to you as well. 153.85. Look at that. That is the high from April 2018. And by the way, it is April. So April 2018, 3 years ago. We've got the center line from the pitchfork, or median line, I should say, from the pitchfork that goes back to October of 2016. We also have the top of the channel that goes back to March of last year. We have 3, very well-defined technical considerations for resistance at 153.85 in the British pound against the Japanese yen. Okay, pay attention to this next week. It's a really big level. Where from there, don't even think about that. For all I know, we could blow right through it. I'm not saying just, you know, short it here and go away. I'm saying we're coming to a huge level. If we get some evidence up there of a reversal, then I will want to short it, right? We'll have, you know, some sort of a risk level to trade against. So I'm talking about, you know, a daily reversal, you know, even a 4-hour reversal or something at that level. So pound yen, very, very interesting cross as we go into next week, in my opinion. These are the other yen crosses we have looked at for the most part, I think, in the last couple of weeks, but might as well share them again. Here is pound yen, Aussie yen, right? Underside of the trend line here. October 08, 2016. You can see all the pretty, you know, inflection points, pivots back here, 2018, 2019. And that is going to be about 86.40. So again, this one's a little higher as well if we get there. You'd be looking at Aussie yen, potential resistance. That intersection, by the way, is with that big low from 2013. You know, I'm sitting here quoting levels from like 2013 and, you know, all that stuff. Price has memory, okay? People like, well, it doesn't matter. It was, you know, it was 8 years ago. Not true. It does matter. You see it time and time and time again. In fact, if I were to say, I would, you know, someone who were to say it doesn't matter, I would say, look at DXY, right? Or we could look at Euro. Let's look at, it doesn't matter. Here's DXY. But like you can see here, what was that high back there? Here was that high from 2009. Guess where we bottomed this year? Right there. Euro, obviously the same deal, right? Right here, that was 2009, that low. Right there, right? Where did we top? Right there. Literally like to the, almost to the tick. US dollar, right? Where did we bottom? Back here, right? It's very close to these levels here. I had this drawn over and we kind of, you know, we did, hold on. Yeah, that level right there was actually from 2015. We did bottom there back in January and we came back for a second test in February. It's actually my birthday. This is really weird. For some reason, people in my family, and I have a large family, I've got a bunch of sisters and all, but for some reason, I swear to God, the markets tend to bottom or top big on one of our birthdays. It's very odd. Very weird. You think I'm crazy that I just said that, but I'm serious. Okay, let's go to Euro Yen, and then I think that's pretty much all I've got for today. Okay, so pound yen showed coming into, you know, a huge level at about 80 pips or so. Aussie yen, same deal. Euro yen, same deal. So Euro yen, go back to 2012, 2016, right? That flash crash in Jan 2019. Right here. And we almost got there on March 18th. So one more stab at it, just about, you know, 131.15 is where we could be looking for resistance. And just for fun, let's throw a fib on there and see what we got. Nothing really. Maybe 50. It's not a fib, but okay, nothing there. Let's throw on this one. Nothing really. So, all right. Again, Euro yen, about 131. One pound yen, what did I say? 150 something 85, 150. 385, and Aussie yen just a wee bit higher too. Those yen crosses look very interesting to me. to potentially reverse from huge levels. Pound yen probably the more so than any of the others, just given the clarity on British pound itself coming into massive resistance. And let's not forget the huge reversal that we had in February from a trend line that goes back to 2007. All right. Okay. So if we don't have any questions, I'll wrap it up. I do want to remind you one more time that Scandinavian Capital Markets, where I'm Chief Technical Strategist, we are looking for money managers, okay? So if you're a profitable trader, we've got clients all over the world that would like to invest in strategies. If you want to get into the money managing world, we can fund you with up to $2 million. So come show us what you've got and fund an account. You can go to Scandinavian Markets. Again, that's scandinavianmarkets.com/fundmytrades. Again, scandinavianmarkets.com/fundmytrades. Okay. And yeah, come show us what you've got. And again, if you are watching this video, throughout the video, you'll notice at the bottom of the screen, there is a link to join our Telegram channel. And that's where I post analysis every weekday and various insights. And then, of course, I do this webinar on Fridays as well. So the link is down there. Don't be shy. Come say hi. And I will be back next Friday at 1 p.m. Eastern Time for another Power Hour with me, Jamie Saettele. So if there are no questions here today, I hope you did enjoy the video. Again, markets are very clear right now with the way I look at things, right? From a pattern perspective. Got a lot of clean setups out there, which is exciting, and I love it. It's much better than when things are confusing and you don't know what the hell's going on. So come join us. We've got a lot of good trades, a lot of good ideas, and a lot of good things to talk about in the weeks and months ahead. All right, take care. Have a good one. Bye.